Hey Alex, I heard that the Federal Reserve dropped mortgage rates by 0.5%. Actually, rates have gotten worse since then. I've been fielding a lot of calls like this, so let me explain what's going on. First off, the Federal Reserve does not control mortgage rates. They control the benchmark rate, and that has trickle effects throughout the economy, but they do not control mortgage rates, and this just goes to show you. What is going on with mortgage rates? Months ago, Jerome Powell signaled with pretty much certainty that the Federal Reserve was going to cut rates at the September meeting. So leading up to the Federal Reserve meeting, we saw a gradual run up in mortgage-backed securities, which is good for mortgage rates. We got the mortgage rates that were better in response to that announcement. And if you saw the video that I posted last week before the Federal Reserve announcement, you'll know that the market was really looking to dissect what happens after the announcement. We knew the rate cuts were coming, but they're going to look to see what they felt about the future. And ultimately, what they got was nothing. They didn't really get any shocker one way or the other. So in response, the market kind of pulled back and is in a wait and see mode. Since the Federal Reserve has made their announcement, it's kind of settled into this channel here where there's good days, there's bad days. And that's an important distinction to make because people think of mortgage rates as if it's on a straight line. Rates are either getting better always continually or they are getting worse continually on a straight line. That's not how it works. Mortgage bonds are just like any other bond or any other stock. There's good days, there's bad days, there's fluctuations, and they're constantly reacting to new developments. So what are the new developments that will push mortgage rates lower or higher? There's two things to watch out for: employment and inflation. On the employment side, anything that shows a weak labor market. If we see employment reports that come out that show that unemployment rate continually rising, or if we see people not hiring as many people, that would be good for mortgage rates. On the inflation side, the Federal Reserve has said, hey, we feel pretty confident that we are moving sustainably towards that 2% target. So new inflation reports that come out that show or seem to indicate that we're making more progress is going to be good for mortgage rates. Now, here's the thing I really want to cover. The people I'm talking to say, I'm hearing everywhere that mortgage rates got lower. Where are they hearing it from? They're hearing it from their current mortgage servicer, or they're seeing it on the news. Listen, right or wrong, the news industry right now, particularly on social media and on the internet, is in the business of getting you to click on their articles. So most of the ones that I've seen, they are saying things that kind of hint that maybe mortgage rates have gone down, but if you kind of dig into that, they never really outright say that mortgage rates are going to get lower. Or they'll say something like, this might mean that mortgage rates get lower. Two, you heard it from a mortgage servicer, or maybe you heard it from another mortgage lender. And to those mortgage lenders, I say shame on you. You know better. Here's what's going on. Unfortunately, some mortgage lenders, and in particular mortgage servicer, are going to prey on people not understanding what's going on. They know that you're going to see the headline, or they will even make an advertisement themselves. I saw that said, Fed just dropped rates, call me today. Are they interested in educating you? No. All they want you is to call them so they can sell you a mortgage. Stick with me, I'll help explain things.